ADNOC sets the price range for its gas unit IPO, and Saudi pauses talks to buy United Bank of Egypt. You're watching the Daily Brief with Forbes. I'm Ramia Faraj. ADNOC has set a price range for its gas unit IPO that could raise up to $2 billion and give ADNOC Gas an equity valuation of between $47 and $50.8 billion. The range is between 61 and 66 cents per share. ADNOC is selling 3 billion shares in its gas business, equivalent to about 4% of its issued share capital. The final offer price should be announced on March 3rd, while listing and trading should commence on March 13th. Saudi has paused talks to purchase the United Bank of Egypt because of a disagreement over the transaction's valuation. Both parties couldn't reach a deal on how to value the government-owned bank due to the devaluation of the Egyptian pound. Saudi's public investment fund wanted to value it in the Egyptian currency with a dollar amount determined at the time of the transaction, but Egypt's central bank preferred a dollar-based valuation from the start. Non-oil trade between the UAE and Saudi rose 9% to $37.1 billion last year. It included $9.3 billion of imports from Saudi, while non-oil exports from the UAE reached $9.7 billion. Re-exports totaled $18.1 billion. The top three commodities imported from Saudi in 2022 were mineral oils valued at $3 billion, ethylene polymers at $980.1 million, and raw gold at $462.8 million. With inflation continuing to run hotter than expected, the Federal Reserve is showing no signs of backing down on its aggressive monetary policy. That's according to notes from the Fed's Policy Setting Committee. They show that the Fed wants to see substantially more evidence of progress across a broader range of prices to be confident that inflation is on a sustained downward path. The Fed says the labor market remains very tight, arguing that elevated wages drive up consumer prices. A team of influential economists has urged China to adopt a new development model based on well-being rather than on GDP growth to fulfill its 2060 net zero emissions goals and fight climate change. In the report, the team, which include two former World Bank chief economists, say they hope the model will play a constructive role in China's 2026 to 2030 5-year plan. They say China's old development model drove rapid growth for 4 decades, but is putting the world at grave risk. The combined wealth of tycoons on the 2023 Forbes list of Hong Kong's 50 richest dipped slightly to $324 billion from $328 billion last year. The pecking order at the top was unchanged. Li Ka-shing remained at number 1 with $39 billion, up $3 billion from last year. Real estate tycoon Li Shao-ki retained the number 2 spot, though his net worth fell 11% to $30.3 billion. And at number 3 since 2020 is jewelry tycoon Henry Cheng. His fortune rose $2.5 billion to $28.9 billion. I'm Ramia Faraj. This is the Daily Brief. Thanks for watching. Bye for now.